Perfect timing, but I know that this isn't a matter of trying to time the market. Why do you see a trade in small caps and mid caps as sustainable? Why would this ETF be attractive now?
It's not just valuation, although they're relatively cheap. I've noticed small caps seem to be behaving a little bit differently than they have in the past. It used to be you kind of needed a strong pro-cyclical economy for small caps to rally. They've been behaving pretty well on days where we've seen some economic weakness. So I think they're behaving in a little more rate-sensitive fashion than they have in the past. And with a couple, probably 2 more Fed rate cuts this year, I think that could benefit small caps.
What I want to ask just quickly about the conversion. I used to sit in a lot on the ETF IQ show, and we did see a lot of mutual fund conversions. Is that just because it makes them easier for people to access, or is it a more tax-efficient wrapper? Why do you like the ETF?
It's certainly more tax-efficient. What we never want to do, we're a fundamental bottom-up equity shop, and what we never want to do is have an advisor who wants the alpha we can deliver, and we don't offer it in the right package. So for a managed account portfolio, the ETF has certainly tax advantage. You also have intraday liquidity too.
So on this idea of continuing the small cap trade, how important is it that we get those rate cuts? Because earlier in the week, Matt and I were talking about I believe it was JP Morgan, Michael Froley and the team there, a new call from them that we're not going to get rate cuts this year. And in fact, the next move will be a rate hike in 2027. What does that do to the sector if that's how it plays
And that's
out?
certainly not the consensus view, but sure. I think small caps would struggle if we don't get a couple of rate cuts. We're going to have a new Fed chair for the June meeting appointed in May. And so I think small caps probably do need a couple of rate cuts to rally, but I think we're going to get them.
Sure.
We've seen some pretty significant weakness on the employment front. I think that's what's going to keep rate cuts in play.
By the way, I don't just randomly yell out the word shark. Although that would be an interesting.
That would be cool if you did.
Interesting tick. No, Shark Ninja. I want to get some of the stocks that you like specifically, sure, because you always bring a few names to us. And I have an analyst friend who's obsessed with this stock, and he says they spend more than twice as much on R&D as any other competitor. So it's not just that he likes, the margins and the fact that they're getting consumers to buy their stuff, but also that he thinks they have good products.
Yeah, I try to bring you some interesting names. We're overweight NVIDIA too. A lot of people come and talk to you about NVIDIA. So the theme for these stocks is the upper end consumers doing better than the lower end consumers. So upscale brands, but still the upper end consumers trading down looking for value. We also want brands that compete on product innovation or product niche as opposed to relying on macro tailwinds, because we have seen some weakness in employment. So Shark Ninja would be an example. They compete with Dysons of the world at a little lower price point. I remember dropping my kids off at college, and there was a Dyson cooling fan and a Shark Ninja cooling fan right next to each other. I saw 6 straight parents go and buy the Shark Ninja fan because it was about $50 cheaper.
Yeah, I've done that with like a hair blow dryer that is much cheaper, and it's like exactly the same as a Shark Ninja.
You've probably never noticed, but you have a Shark Ninja cooling fan in the makeup room here.
Really? Wow. Okay, we are fully supporting Shark Ninja, apparently.